Hey guys, Elliot Wave Sage. Let's do a market update like always. Then this is financial advice. Always do what's best for you. Excuse me. I have been traveling, so I haven't had a chance to do a video. The market's been pretty choppy, but here's just the overall picture. As you know, I showed you we're either in a triangle or this alternative count. Here's the alternative count where we bounce back up and then have a massive crash. The other alternative is we're still in the triangle, and the triangle. It was really important the weekly close, and we draw the lines, and if we're careful enough and look to see if this got invalidated or not. This is the futures. We could see closely if how this looks. It looks like to me here from the futures we didn't invalidate. The triangle's still valid. Triangle's still valid. Um, the Nasdaq rejected in our sell area, struggling. I expect a dump soon, and then the Dow Jones back with again false breakout back in the downtrend area. And let's take a look at SPY cash market. Look at that triangle again, the line, and we're back under it, and weekly close. So the triangle is still valid. This alternative view may not happen. We may just start crashing in the next couple weeks, guys. It's still a valid. This is still a valid triangle, and we could be going down already. We don't know. So until we could get a bigger push out, a close outside, we haven't invalidated it. Now the real tough thing that could happen is, even though the triangle's valid, we come down here, and then either we bounce or we crash, and not necessarily this is the decision point, but down here is. So and of course, if we start to go up, then we would just put the B here, and then finish in C, and it would be a very shallow connector. But you could see we definitely have ended this cycle. A lot of RSI is getting burned. A lot of RSI is burning off, but it still has more room to go. The 4-hour still has more room, so it's more downside coming. The daily starting to roll over. Like to see that RSI dip down more, but perhaps we'll bounce sooner. So the strategy with the market is short where it makes sense, and then hedge with long positions where it makes sense. Each chart, looking at it, analyzing it, and taking calculated risks on the long side, but ready to dump it if it doesn't work out. I posted some long ideas on my Twitter feed. I think most of them have worked out pretty well so far. Some are still incubating and should at least get an upside move. Now, if we get this, they'll have much bigger moves. Now, that's the market. Now, Bitcoin's starting to break down, guys. I told you this was a sell area. This is where, based on my system, we would dump, and we're dumping. Now the question is, if the triangle is done in the indices, this is what we're going to get. A WXY, an ABC connector, and then a WXY drop somewhere down to 8,000, 6,000 when it's all said and done. If it's the triangle dump. Now if it's not, then I would say this won't happen, and I would look for an alternate count where this is maybe 1, 2, 3, 4, 5 down, and then you have like a 1, 2, and then maybe 3, 4, 5, and then when that falls, the SPY pulls back to new lows, but Bitcoin holds its high. But right now Bitcoin's bearish, and again, it just takes patience, guys. It just takes patience, everyone. And now here we go, down we go. So oil pulled back. The impulse ended. This should be an area where it should find support. Now it could still fill this gap a little bit, But this area, so what this is telling me, energy and perhaps the cyclicals could be in play soon, or get at least a third wave up to 90, and then we could get an X, a connector down to the 50-40 area, or we impulse out and we're well over $100 a barrel. But so just keep an eye on that. And then the 10-year, I believe, is in this ABC, and we're about to drop down. So this could be like a risk off move in the market. I think that's what we're going to do. And then the 2-year, we're close to finishing where this B was. B could be finished. And remember, when we got this drop, that's when the banks collapsed. So this could be when part 2 of the banks collapse. This could be, the second round of bank collapse is here. The other alternative is B goes higher, which it can. So it's tough to time it, but we should get another push lower. The dollar index, looking at it, looks like 5 down. I was thinking A, B, C, and 2. If it's this, like I show here, then that's going to be the indices dropping and then bounce into that 430 level. The other alternative is the dollar's already bottomed, right? It's already bottomed, and this is if the triangle is done. The dollar's already bottomed, and then this count becomes an ABC, like that, and then it becomes something like that. We'll know if that downtrend line breaks. So I'm watching that downtrend line. If that dollar breaks out of that downtrend, and there's some other pro traders watching that too on the dollar, guess what's coming? This leg, and that's gonna really bring the indices risk off. That's gonna really drop the market, just like we saw on here. So we have to watch that. Have to watch that with the dollar now. But right now, this isn't a valid. It's not valid count. So that's why the market hasn't decided where we're heading. The future has not been determined yet. Perhaps there's clues I'm missing, but right now I do think that the smartest idea is to short when the market gives you a chance, and then also go long and keep an eye on things that should be bouncing. And I'll go explain that. So short, if you look at the NASDAQ, I do like shorting it when it bounces. And it was like some really easy money this week, guys, because the market was kind of getting predictable. Now I think it's going to dump, but I do think, like, if it were to jump up on Monday or Tuesday up to 318, 319, I would take another short position and then let it dump again. It's just gonna struggle in this area until this C leg finishes down here, and then we can finish B, or we've already topped. And if we've already topped, then the next move down will be essentially a massive crash in technology. A massive candle back down to 298. So we'll have to wait and see. But if we decide, if there's dumb money's pushing it higher, YOLO, crowd. Then I'll wait and short that here and take that. But it was really like trading this was not too difficult this week. Short, sell, close it, profit, up, short it again, profit, short, profit. I took profit here, and I'm waiting. I actually was like, okay, we're probably going to come back up to 390. I'll do the same thing again. So it's just kind of getting predictable, but I do risk missing the move if it's down. But my gut tells me we have like a 1, 2, 3, 4, 5, and then A, B, C, and we have one more push higher in tech. So I think tech could have another little pump like that to finish off this impulse, the first. And then we can get a pretty big drop. So I'm looking for that setup going into Monday. Hopefully I can get that, but there's no guarantee. There's no guarantee, but that's what I'm looking for, something like that. Then, so then it's like, what do you buy? How do you understand? What kind of things are we looking at buying? Well, the overall theme in the market is inflation, guys. It's inflation. It's things that are going to benefit from inflation going higher in a secular sense. That's my thinking right now. And so I'm looking for, when can I buy gold and silver, the miners, stuff that can pass on costs of inflation to the consumer. Some of the staples even that dip, some commoditized things that are working. I'm looking for things oversold, commodities oversold that need to rally with the rest, that the complex. Like uranium's really lagging, but I expect that to catch up. So so there's like, for example, GDX is a good buy. UUUs is a good buy right now. Like, why? Why would I want to do that? Well, I have a pivot that I can trade against, 483. So it's low risk, high reward, if this counts right. And if we look at the stochastics, the daily RSI, it's still low. It's not overbought. We're open lower here. So I still have to recognize there is risk. And then you go to the weekly. The weekly is over sold here. It's due for a weekly launch. You see how that launched, and look where the price did last time. The weekly cycle was down here, and look down here, it launched. So more than likely do the same thing. Now, if you see, you always you have this hump, you up and a hump, up and a hump. So here's an up. So it could still pull back a little more, but I want to be an accumulator of it. But I do want to be careful because it is there is potential that this is a massive top-in pattern. But I'm playing the odds that it isn't. And so like in uranium, the same way. But I have a stop loss. But I look at these things. I'm like, okay, uranium should run. It's commodity. CLF looks like you have a three-wave pullback here, and today erased divergence here. And then again, stochastics are reset. Daily almost reset. The weekly's reset. So you look, the monthly's reset. So these things are ready for a bigger rally. And if you look at like Cleveland Cliffs, you have a left shoulder ahead and now right shoulder and plays out. So I'm looking for things like that to hedge my shorts. Now, of course, I will dump these if the market starts breaking down. DNA, I gave you guys DNA. Stocks like DNA make you think the SPY could bounce to 430 because this is being accumulated here. I expect a pump out of this at some point. Perhaps the Russell in the market will pump to 430 top, and then DNA could collapse later. It seems like it's having a hard time pushing any lower. So how can the SPY go to 320 but DNA go higher? You see, it can't. So this could be a clue that the small cap Russells, need more upside before they can have enough down. There's not enough sellers anymore. So I look at that. So I'm looking at some cyclicals that are oversold, like CLF and DNA. VUSI is oversold. Needs a bounce here. It should bounce one more time. So there's mixed signals. These support an idea of a 430 SPY. We bounce and then we have enough more room to go down. But like I said, if we do crash, we have to stop out like here at 350. I showed you Celsius. You could call it a consumer staple. I mean, these drinks I'm seeing are everywhere now. They're in almost every vending machine now I go to, and I notice they're almost always empty or people are taking it. So it's kind of like a hot thing right now. So, I wanted to get in on it, and it's in my buy area, and it's actually staying supported pretty well. So these are kind of some ideas, but there's a lot of ideas like that out there. Energy, for example, Bohr, 690 and a three-way bounce like oil. This could be a 2 here on its way to 12 or $13. Again, it could still might not work out, but there's trades to be had on the long side. But what am I not buying? Almost anything on this list. I don't like any of this stuff, any of this technology stocks, guys. I don't like any of it. Tesla, if I'm even going to think of buying it, it needs to be here, so no. AMD, it needs to at least be here. Even if I'm going to think, so no. You know, AI, oh hell no. Nvidia, no, don't even bother. No way. Apple, oh yeah, no way. Microsoft, topping out. So I don't like anything. Oh, Facebook, way overextended. It may actually, I think that's probably finished. Way overextended. Amazon was a trade, another long opportunity. Remember, guys, I gave you this one, a long hedge. Oh, it's up 3% today. Again, these charts work. These charts work. Now, if we break this downtrend, look at this downtrend line. That's a good. So where's Amazon's earnings? Maybe Amazon's going to have favorable earnings, guys. It's going to have a breakout, right? Maybe people are okay buying it. Now, I'm not going to trade on that, but if you bought it down here, I would hold it in the earnings and see what happens. I mean, maybe you can get a nice pump at Amazon. Maybe this will help. Maybe the consumer discretionary could push the market up a little bit, or some of it. I don't know. But this looks like 3 waves here. We need to probably erase a little more divergence. So if anything has a little more upside, even if it's a 1-2, but I think it's good. So Amazon, I mentioned Google, it's struggling. I would be more careful with Google. I actually don't like what I'm seeing here anymore on it. I don't know if that's going to happen that I have shown here. I would be more careful. That could be done here. So Google, I don't know if I like it as much. It's not really doing well. Netflix, needs to head lower. So none of these look good to me. A lot of the meme stuff, like I said, the meme stocks to me are based, some of them, not all of them, are based, and we're seeing pop, like Wish is up huge. You're starting to see, I think some of these are going to pop, man. I think they are. I think like Fubo will be popping soon. I think some of these, they're due for like a pop, like a squeeze pop, and then it could go lower. So that tells me maybe the Russell, part of the Russell index that's lagging may make up some ground potentially. So that to allow some of this to pop off, we'll see. We'll see. So again, that's what I'm seeing in the market. Again, not like in China, although if the dollar is going to go lower, China will go higher. Now, if the dollar's peaked, then China is going to get obliterated. And KWEB isn't in my area, so if KWEB is trading here, I would be more excited about buying China tech. It's not, so I'm not buying it. And then if I go to the emerging market index, how are emerging markets just looking in general? The EDC, I was looking at that today. That's the triple. Let's look at the EEM. It looks like to me it needs another leg lower. So that means that's dollar strength coming. And again, if we break that low, then this could be a connector, and it could be a 1-2, and we could have a massive drop and a massive rise in the dollar. That will surprise a lot of people. Okay, and then gold and silver could be a dip buy here, 1930, 1880, silver at 24.23, if it happens. People ask me about nat gas. I warned you guys that I thought that pump would fail. It looks like it's doing that, but here was my sell area. There was the pump. I said oil would pump. It pumped, and now it's pulling back. That looks like an impulse down in 5, and it looks like a 2. Maybe it can take another swing higher. Again, I lean bearish in natural gas for now, but I'm not going to short it. No way. But I would accumulate if it comes down lower, or manage your money accordingly. So what does that mean? See, Boyle almost hit the sell area. Did a video down here. We ripped higher. I said it was going to do this three-way move. It did it. Now we're pulled back in 1, 2. Be careful. It could come back down and tag this downtrend line. You know, it kind of lines up here. Maybe it's even like a megaphone pattern potentially. We'll have to wait and see how this bottom plays out. And that's it. VIX, of course, getting crushed, but the VIX really, the next support area is 1467. This would imply maybe the SPY is going higher. So again, mixed messages. So you can't just take, I think, in this market right at this point, one side. I think you have to play both sides. And then when the market makes that decision, then you could start dumping you know, the positions that make sense or taking profit. But I think it's good to be careful and have your eyes on both sides of the market right now, and then let the market decide. And then, hey, if we pump, great, I'll sell these, profit, short again. Or we crash, dump the hedges, and then ride the shorts down. So it's kind of like that's the play. That's the play right now. Okay, so, and one of the things that happened today was a miner in Chile got nationalized. If you watch my videos, I told you that's what's going to happen with these international miners. The commodity will become too valuable and the country is just going to nationalize these mines. So if you're going to buy miners, individual stock miners, you need to buy them in free countries, but really mostly US mines. Or buy the index, buy like an SIL or GDX, you know, it's diversified. Because if you buy an individual miner that's nationalized, you can get really hurt. So just know there's that risk out there with miners. And we saw that today in I think lithium. So just be careful there with the miners. Also, miners don't make a lot of money if the commodities are going to go higher. They need, you know, their profits, because the price of the commodity wasn't going up as fast as their costs were. So they lagged. But that has to change, and I think it will if inflation really takes hold. And that's what it seems like is going to happen. Okay, people have been talking about mortgages. Where are we with mortgages? Well, I've just done a quick graph of 5 waves. It's a clear 5 waves up in rates. If you look here, this looks like 5 waves down in A, and now we're in B. It looks like we're going to head lower in mortgage rates. But as you know, since we're 5 up, that means we have another swing up. So unfortunately, rates are going to go higher, I think, in the future. So if we do dip to 5, and I read an article, they said 5.5 interest rate would be the sweet spot. The sweet spot. It would unfreeze the market and cause a flurry of activity. And I do believe that's where we're going to head. I think that's where we're going to head. And then, boom, the next leg higher, similar fashion. So this could be your last chance to get low rates for a while. In this area, there's your wave 4 low. Perhaps it can dip even lower, but so that's what I'm looking at. So that means what's housing? Housing's going to actually, as this drops, housing may have a good summer coming up. Housing may have a good summer coming up. That's why inflation could be running hot, and that's why people predicting interest rates are one and done. I think they're going to be surprised how sticky and hot inflation is going to be this summer, with China opening and really getting going again. And you have the infrastructure bills, full swing, building plants all over. You know, if you know the wafer fab and all this stuff happening. My guess is inflation is going to be really, really hot, and we're going to see that trade again. And that's where I think the 10-year, once we get this, is going to start to rise again as inflation really is hot. And then the Fed's going to have that come to Jesus moment. And if they do one and done, that may be what causes the hot inflation. It may be in 1970s where they do one more rate increase, and then the next month everything spikes up and goes to hell on them, and then they're like Arthur Burns, and they're like, oh, we stopped too soon, and look at this, and then they regret it, and then they have to really ratchet it up again. So that's probably how this sell-off goes. The other way I think it could happen is an accident in the treasury market with our debt default. X day, they don't know when X day is. What if X day is a lot sooner than they realize? And then they can't react to it fast enough, given the division in the Congress and society, and there's an accidental default, technical default, then all hell would break loose in the market too. And of course, our interest rates would go much higher, and that would bring rates up too. So there's that risk out there, of course. And then I think that's it. So that's my video. And I would say I still look for more downside, but then the market's got to really make a decision. Is it in a triangle, and are we going to crash, or are we going to drop some more and then bounce? Surprising, bulls and bears would probably be surprised by that kind of pump that I'm showing here, or if we get that and pump, and then everybody's so euphoric and all in. There probably won't be a bear left. Every bull would be all in, and then we get a massive crash that more than likely will take us down to the 280, 270 level, but it does open the door up to go all the way back to the COVID lows, which is crazy. But this would be a wave 3 down, so this would be massive volatility. This would be like March 2020, selling thousands of points down every day in the Dow, circuit breakers here and there. That's the kind of selling that's coming when this is finished, guys. That's the kind of selling that's coming to get us down here and erase the divergence. All right, that's all I've got today.